All right. Hello, everybody. Welcome back to another episode of the Market Close. Today is a big one. We are here kicking off big tech earnings, Mag 7. Got Tesla and Google. Folks, this is going to be a pretty important day. You got the S&P 500 that is hitting all-time highs as of basically 20 minutes ago. 63.50 is what we got on the S&P 500. And in order to maintain that basically 7-year multiple high that we're getting 22 times versus 18 times average, we need to get the biggest companies in the world to execute. And in the way to get them to execute is really for them to put up the numbers. As you can see right here, S&P 500, 633. Some of the biggest companies in the world, Tesla and Google today, will be showing off if they have the ability to show the numbers that the street thinks are necessary to ultimately get some momentum. For the next 30 minutes, we will be going through what we've got on Tesla, what we've got on Google. At around 4:05, we will get the results. Then at 4:30, we will start Google's call. That call will be done by 5:30. And then by 5:30, we will immediately go into Tesla. So the first, call it 25 minutes from 4 to 4:25 are going to be kind of wild. I'm going to be trying to getting all the numbers I can to get the results, all the headlines that we're going to be seeing. We already have some headlines going into both of these names that pretty much came out over the past 20 minutes. And so we'll be discussing that and going further from there. To break this all down, the reason I keep saying we is because I've got someone to join me. I'm live on his channel as well. So hello to Jose's audience. Jose, what's up?
Hey, how's it going, man? How's it going to the community? Pretty excited for big tech earnings to finally start back up, especially like you mentioned, we got some interesting news just in the past hour or so. Today, we got some interesting stuff as well. And yesterday, I mean, we saw some massive announcements of just AI investment in theory. So it's a pretty fun time to be an AI investor.
This is a big one. We got Tesla, we got Google. I think we're all really excited. Jose, correct me if I'm wrong. You own both of these names, right?
Yes, I would say my Google position is a lot more important to my portfolio than the Tesla is. So I'm definitely I'm rooting for both, but I'm really rooting for Google today.
Got it. Yes, I own both as well. And so these comments are great, guys. Yes, I know what I'm wearing. Okay, I want to have some fun. Okay, Jose, he's treating it like a typical New Jersey summer day. My AC is working again, so no, I'm not burning up. But I wanted to have some fun. One of you guys said Indian Jones. That is hilarious. That one. That's the best one I've seen so far. That's the best one I've seen so far. All right, let's get into it. We got a lot of questions. Jose, I want to get your raw thoughts. Let's start off with the Googs. What are you expecting on these earnings? I will pull up the earnings expectations in terms of what Wall Street wants, but what do you think is going to happen?
Yeah, so for me, my biggest concern here is going to be kind of the cloud space. We did kind of hear reports that OpenAI is now using Google Cloud Service. Are they going to announce anything about that during the earnings call? We do know that the cloud market is still more supply constraint versus demand constraint. Is this going to create maybe a reason for Alphabet to maybe increase capital expenditure, which could be very bullish for companies like NVIDIA, like Broadcom, which they use a lot of their AI chips? So my main overall look is going to be on the cloud service. Then obviously I want to understand any updates on AI overviews of their AI solutions. I used to be a 100% OpenAI bull in forms of their models. That's the only model I was using. I'm saying now I'm doing 50-50 with Gemini and with OpenAI. Luckily for me, I'm able to kind of write them off. I do have both of the top tiers. So I'm paying $200 a month for both. And
wow,
both of them are
that sounds like a guy who invested in NVIDIA pretty early. $200 a month for both? That's a car payment, bro. That's $400 a month.
It is. It's insane. But like, I mean, I use AI on a daily basis, nonstop, and it helps me for a lot of the things that I do. But it's pretty impressive how Gemini has come from this Bard 2 years ago, which kind of sucked, to now being, I think if you look at the betting platforms, many expect it to be the top model by the end of this year. So I'm very excited to see what we're seeing in their AI innovation. As a YouTuber as well, I am seeing the ad business is still pretty strong. I haven't seen any hiccups on forms of my ad revenue side. And usually if I do, it might be a small indication of some worries. But right now, I don't see any worries at all in forms of ad or search revenue.
Cool. I agree with a lot of what you're saying. I made a quick little list right here, both on Google and Tesla. So we'll look at that in a second. Real quick, George, thank you for the 10 gifted memberships. Really appreciate you, George. Thank you for being here. And thank you for spreading some of the blessings with the community with these 10 gifted subs. And Invisible, I think this is for you, Jose. You got this.
Yeah, he wants me to send him the digits, it seems, of my email to my channel. So
Okay.
Invisible, I'll post that later.
Yeah, and also if you want to get in contact with Jose, he's active on Twitter, so you can DM him as well, and he should be able to get in contact with you. Okay, so
Actually, that's great. Yeah.
Yeah, that would be the best way to get in contact with both of us. Here's a little bit of a cheat sheet. We'll talk about Tesla in a second, but I just wrote this up. This is what I'm looking for when it comes to Google. Number one is GCP operating margins, which I believe inflected. Maybe not, I'm exactly correct on this, but I think 34% last quarter. So really, you saw some incredible operating margin velocity from Google over the past year. Year over year, I think that's up about 5%. AI subscription revenue, if they show it, they did introduce that new AI Ultra package of $200 a month that includes a ton of different things along with YouTube Premium. I wonder if they're going to segment that out. I kind of think they won't, but if they do, that would be really nice to see in terms of how fast that's growing. Third of all is search growth. So the street's expecting 8%. Let me say that again. The street is expecting 8%. Some of the more bullish analysts like a Morgan Stanley and Oppenheimer or JP Morgan, they came out over the past couple of days and they said, you know what? We think they'll do 11. Last year was 13.4. They're definitely not doing 13.4. If they do 13.4, this thing's going to like 250. I'm being hyperbolic. But if they match the year-over-year growth, because they haven't done that for 6 quarters, that would be, just a monster quarter. They're probably not going to do that. But if they get above 8%, closer to that 10, 11%, I think the street will be really happy. So that's a big thing I'm looking for. Number 4 is AI overviews, DAUs. I've been using it every day on stream. I'm becoming a literal daily active user of AI overviews. I don't know if they're making money on me on that, but it's definitely a product that's growing. So I think that's going to be very important. And then Gemini MAUs, I think the last number we got was like 400 million. If that can get to like 500, 550 million, I think that's going to be important. And then finally, YouTube growth. They don't really tell us that much about YouTube outside of its revenue growth. I think it'll be consistent. And as long as those 5 things, in my opinion, are sustainable in terms of going into Q2, then we should see some upwards momentum on Google. Jose, do you think there is a AI overhang in terms of Google not being seen as an AI company, which is why they're getting discounted so heavily in the Mag 7 in terms of their multiple?
I think so. I think you have all this fear that you have all these I think because Google doesn't make as much noise, right? We heard OpenAI saying, look, we're going to expand this massive investment with Oracle. You even hear Elon with his XAI kind of talking about the same thing. I feel like Google is just quietly just destroying doing its thing. And maybe that's why right now the market is saying if you're not talking the big game, it probably means you don't have the big game. But I think there's some fear that this is going to lose in the AI space. Regardless, like you mentioned, you're using a daily basis. I'm using it on the daily basis. They tricked me to get into that Ultra subscription. And
that's 200 a month, right? The Ultra.
Yeah, that's I think it's like 2 something right now. They have for the first 3 months. They have it at like 125.
Okay.
But I'm pretty sure I'm going to keep it. I'm trying to find what are going to be the few models that I stay with that I'm willing to pay the price. Right now, Gemini and OpenAI are definitely it. But I want to say, even with this AI search weakness, you still, if there is a thing, you're still going to see this massive demand for AI compute, which would bode well for their cloud business. And I think that's what I think Google Cloud is the most undervalued play out of all the cloud server providers. There's massive valuations on AWS. There's massive valuations in Azure. I think if you kind of look at the valuation metrics of just Google Cloud itself, is probably one of the lowest. And I don't think that's fair. I think this is one that has a lot of benefits from them designing their own ASIC solutions to being big partners of companies like NVIDIA.
I agree. And I think the reason Google's been getting a discount compared to the Mag 7 is primarily based on that reason, that the street doesn't see them growing as fast as AWS or Azure when it comes to cloud growth. And then they see them insulated or not insulated to the risks of AI with 10 blue links being taken away. Meta doesn't have to deal with that because a social network's different than a search engine. And you put those two together along with the fact that some of their other bets are doing well, but they're not like super profitable, aka Waymo. It just doesn't get a premium. And I think Sundar has to create confidence in a lot of people that Google is an AI play. By the way, the one thing I think it's important to understand, by the way, I put the Google pump and dump link or poll in the chat. I'll turn that to Tesla in a couple minutes, but you guys can vote on Google pump or dump. This stock is up 30% in the past month. So if there's a world in which they underperform against expectations, we absolutely could see a dump on this thing because it's up. It's made its move, right? People expect a move going into earnings. If the earnings aren't perfect, it could dump. Someone did buy $20 million worth of calls yesterday for strike price 210, expiration 919. Now, maybe they're using that to hedge. Maybe they're using that because they're actually that bullish. But we do have a lot of people that are betting on Google. The question is, can they ultimately execute? Matt says, Amit, I got my friend Ian in the chat for the first time. Can you give him a shout out? Ian, shout out to you. Shout out to Matt having you here. And shout out to everyone who is watching our preview of these earnings. 79% of you say pump. So obviously the crowd is bullish on Google. And the question is just going to be, can they execute against that bullishness? Yeah, they're up 14% in the past month, 30% from the lows is what I meant to say. So 14% in the past month, 30% from that 150 level. But still, I mean, it has indeed made its move. All right, Tesla. Jose, we got a lot of breaking news on Tesla just today. I want to get your quick thoughts, but we just saw this like 40 minutes ago. Tesla and Nevada, which I'm probably saying wrong. Some people say Nevada. Looks like robotaxis are coming to the state. Here's the question. Do you think the numbers are going to be good? And if the numbers aren't good, do you think qualitatively Elon will be able to get people to be excited about Tesla?
Yeah, I mean, in forms of vehicles, I don't think the numbers are going to be good. But I think if you are an AI investor, a Tesla investor, you're okay with that. You know that the real growth story is what's happening with the AI trajectory, what's happening with robotaxis. We got obviously that bullish news today, like you mentioned, on the robotaxis in Nevada, whatever. I'm pretty sure I said it the same way twice, even though in my mind I thought it was different. That's what I think you want to hear more about AI robotaxis. What do you see? Has your timeline shifted of when you expect to kind of expand? We saw the expansion in Austin pretty quickly after the initial rollout. Is that going to continue? So unfortunately, I think most of the Wall Street big players are going to be looking at these numbers. But I think as a true Tesla investor, you're looking for the AI story and what's happening there. And also kind of that the quiet story of the energy market. I mean, are they seeing growth there? How has that changed with kind of any of the new regulations that have been in place in forms of some of their energy solutions? What is the commentary on that? Because we already know that kind of their power solutions was pretty strong, and we've seen Elon use their mega packs in their data centers because it's crucial with these massive GPUs. You see this vast fluctuation in power. And something like the energy solutions that they have can help kind of create a stability there. And XAI is using them nonstop on their platforms. Is that kind of a massive tailwind in the future? Are these kind of Stargate projects also going to start to implement stuff like this into their solutions? What can they tell us about maybe that portion of the AI story that we don't really hear too much about?
I agree. I think the numbers are going to suck. If the numbers don't suck, maybe the expectations being that the numbers are going to suck is what creates the rally, right? Because it goes against expectations. But if the numbers do suck, which I think we all know it's just not going to be the best, then the question becomes, what can Elon get people excited about? And there's three things: autonomy, robotics, or as you said, Jose, compute, data infrastructure, and their plans to be able to scale that to get Tesla to continue to have the differentiated moat it has when it comes to autonomy. I think Elon, and this is me anecdotally speaking, I see a lot of his tweets. I've been reading his tweets for the past couple of days. Everything is about Tesla, SpaceX, and Neuralink. And it seems like he's back to business. It seems like he's not going to be as political. Now, maybe he does become political randomly. He wakes up. But I think the reason the stock fell to 275 originally last month was because of the Epstein stuff. And then it fell to 288 again because he said he's starting the America Party. It's been 2 weeks. There's no mention of the America Party. And so maybe Elon is getting back to Tesla stuff, which is what ultimately investors care about. Here is Dan Ives. He was just on about 10 minutes ago talking about what he thinks the Tesla story will look like and what he expects from Elon and what investors are expecting from Elon on the call today.
He's taking some fire.
Yeah.
Can they get past that?
I mean, I believe, look, it's a key earnings call. And as everyone's a key earnings call, but this is a dramatically different 3 months when you compare back to April. I mean, now you have robotaxis, which our team saw front and center in terms of launching. The key on the call is when the other cities going to come on in terms of robotaxi. I think you're going to have 25, 30 cities over the next year. When I talk about wartime CEO, is that this is a recommitted Musk. and he recognizes this is an AI arms race.
Yeah, but when he made the announcement about the new political party,
Yep.
you questioned as to whether this was a recommitted Musk. So what makes you change from then to now?
Yeah, and obviously he didn't like that we suggested that. And my view is that I think he started to read the room. If you look since that moment, you've really seen him shy away from, I think, a lot of politics. And I think Musk recognizes now this is the window. This next 3 to 6 months, especially going into the November board meeting where I believe they will take a significant stake in XAI, he recognizes that this is the time for him to lead. And I think that's what you're going to see on this conference call tonight, even though deliveries and obviously near term continues to be a work in progress.
What if there's nothing that he can do to win back the business and the customers that he's alienating?
Mm-hmm.
You ever worry about that?
Look, I mean, of course, we've worried about and we've talked about some of the brand issues, but I believe it's our view this is a $2 trillion market cap. $1 trillion of that is going to be autonomous. And when you think about robotics and Optimus and what I view as the future, I view that as relatively breadcrumbs relative to where I view the market cap of Tesla over the coming years. Because I think in physical AI, the two best plays, godfather of AI, Jensen, NVIDIA, and Tesla.
The two best AI plays of anything.
The two best physical AI plays.
NVIDIA and Tesla.
I think in my view, it's not even a question over the next few years. And if there was a third, it would be Palantir, the Messi of AI.
All right. Thank you.
All right. That's what you got from Mr. Dan Ives. Jose will be back in a sec. In terms of what the stock market is doing as we get into the end of the day, we got about 12 minutes until we get earnings. Palantir right here, 154. The reason I think Palantir is getting a move is because Trump is at an AI summit right now with the Olin podcast. Dan Ives just put out a note. You just heard him talk about Palantir. He put out a note from Wedbush saying we think Palantir, Microsoft, NVIDIA, and Palantir are going to be some of the main winners along with Tesla when it comes to this AI revolution. So maybe Palantir is getting a little bit of a bid from that. I don't think there's anything like fundamental, any news that came out or anything, but that AI sentiment at that DC conference is what's getting the market excited. Palantir right here up 3%. HIMS, incredible day, 17%. My bet here is that Wall Street Bets is looking for companies that are shorted and they're blowing them up. HIMS is 38% short. And so it might be blowing up based on that. S&P 500 up almost a little bit towards 0.75% right here, 633. This is at all-time highs. So it's very nice to see the S&P 500 gets all-time highs before Tesla and Google. And if they can just give us some good numbers, then that could solidify that as well. Google right here at 190 and then Tesla right here at 332. Real quick, before we get back to some of the coverage, just to cover this news, because it did break literally 5 minutes before we went live. Wall Street Journal reported that the DOJ told Trump that his name was in the Epstein files. And I read the article right before going live. The article didn't say Trump was doing anything inappropriate. It's just that the DOJ told Trump that his name was in the files. Well, the White House responded literally a couple minutes after the article came out and said this is unequivocally false. So you've got that narrative going on as we begin to analyze some of the big tech earnings that are coming in as well. Jose, Optimus, do you think we get any update at all from Elon this quarter?
I don't know. I think what we might just hear maybe that long-term thesis. I know there were some reports that I think it was about a month ago that maybe the production that they were expected to do this year, I think it was 1,000, the number. I forget what was the actual number, but I think it's supposed to be a little bit smaller because of some of the supply changes and some of the mechanical things that they were working out. So maybe just an update to that. I would say as an investor, I would like them to make all the changes right now and have lower numbers this year as they fix everything else to make the production even faster throughout the other years when it really matters. So to this year, still kind of like that research and development phase, and I'm pretty sure it's going to continue, but at least some update in that. Maybe we did see that kind of grok is being implemented now into Teslas. Have you gotten the update yet on your vehicle? Have you tried it? I don't think I've seen it on mine just yet, but we'd love to see that integration also and what they're going to do with it a little bit more.
Yeah, I've not got that update yet, but and you didn't either. But that to me is very bullish, and it also warrants probably an investment into XAI. Do you think he's going to speak about that at all, or he's going to leave that for the November meeting?
I've been thinking about it. Why hasn't he invested? And I was actually talking to our good friend Neil, Couch Investor, a few days ago about it. And the only thing I can think about is XAI maybe doesn't want to be invested on by like a big company like Tesla, if they want to maybe provide that solution to all types of automakers. We've seen a lot of companies, when one player invests heavily, it kind of pushes potential customers to kind of not want to try that product or use that product. So I wonder if Elon unfortunately has to think both as a Tesla CEO and also a kind of like a XAI mentor or whatever. I forget what position, if he's the actual CEO there, but I wonder if for XAI, it makes more sense for you not to have one car company invest in you, because it might kind of push away other car companies from using your product. So that's the only logical thinking, but I don't know if logical thinking makes sense at this point.
Yeah, and one argument is that he's using XAI as a bargaining chip to get the pay package. So I think that's fair. I think that's probably the reason why they didn't invest in XAI at a $18 billion valuation back in June of 2024. Jose, you're deep in the semiconductor space. This is something Elon said yesterday. We're going to have 230,000 GPUs in Colossus 1. Then at Colossus 2, we're going to have 550,000. He also said we want 50 million H1 equivalent level of chips live in the next 5 years. Sam Altman says we want 100, or not 100, but a million. 100 million. He said we have a million GPUs. He says we need to 100x that to 100 million GPUs. I mean, what is your take just in general on all this AI compute that is being spent? And does that have any implications for Tesla and Google today?
I wouldn't say for Tesla, the only real thing I can see is maybe kind of just an increase in capital expenditure to whatever. But I think they're already, Tesla has mentioned that they are already kind of happy with their compute. I don't think we're going to see much capital expenditure there. So nothing too much for Tesla. I think for Google, it kind of showcases if OpenAI is making these types of investments, if XAI is making these types of investments. I wouldn't be shocked if they did increase their capital expenditure today in forms of earnings. It's not something I'm expecting, but if they do it, I wouldn't be shocked. So I wouldn't be shocked there. The overall thesis, you don't have to take those numbers to true value, but the overall thought process from all these big players is we don't have enough compute. That's the easiest non-true value that you can come up with, is you don't have enough compute. This is bullish for the whole AI infrastructure, obviously NVIDIA being the top player, but it trickles down to your secondary players, your ASIC players, your power solutions, your infrastructure players. So the AI compute is bullish for cloud players like Google Cloud. So that gets me excited about the overall thesis for Google and kind of seeing some numbers on Google Cloud today.
Agreed. So again, in about 10 minutes, we will have earnings. At 4 p.m., we'll have the close, probably at 4:05. Google usually tends to be even quicker. Google by like 4:02, you get the numbers. Tesla, I think, is around 4:05, 4:10. And then the call for Google starts at 4:30. And then the call for Tesla starts at 5:30. So we will try to give as much analysis as we can before the call. I know during the call, people like to listen. And so we're going to just play the call. We'll be in the chat, Jose and I, trying to break down some of the numbers as well. But it will be 2 calls back to back as we try to break down some of these numbers. Speaking of AI and all this compute, Trump is in DC giving a speech, a keynote address at the AI Summit. Here are some details on what that AI Summit is consisting of and what it means for the future of compute build out in the United States.
Also lower the market for migrant labor coming into the United States. Another point that he made was very critical of Silicon Valley firms using the term BS, but not using the phrase BS to describe the position of Silicon Valley companies who are laying off American workers, not hiring American STEM graduates out of American colleges, and at the same time applying to the administration for more H-1B visas for foreign workers to come into this country. He said that argument is BS, although, as I say, he didn't use the phrase BS. And then we're expecting to hear a little bit more from the president this afternoon on this new AI agenda. Take a look at some of the items that we've been briefed on so far today that are included in this 28-page document the administration released today. They want to partner with industry to deliver AI export packages overseas. That is, so that American AI is the future of the industry. They also want to do a lot here around data center permits and removing federal regulations. This is largely about environmental regulations that they feel are slowing down the growth of the physical plants of the AI industry. And then also they're talking about DEI. They don't want to see DEI built in to AI. They say they don't want any sort of political ideologies in the software. Scott, back over to you.
All right, amen.
So we'll get more details on what's going on with the AI action plan. But the fact that this president is really embracing the investments that are needed to build out data centers and compute across the country, I would imagine, Jose, you think that's broadly bullish for the AI names.
Oh, definitely. I mean, one of the things they talk about is kind of reducing kind of the friction of opening up some of these data centers and getting kind of the electricity and power infrastructure for it. And it kind of reminded me of something else. I'm going to be interested of listening during the earnings call. The big beautiful bill, right, passed and all that. And one of the things within there was the ability to write off your AI servers on year one. And that can kind of 100%, and that can obviously, if you're able to write off a big tax chunk on year one, you're able to reduce your tax bill dramatically. And in theory, you have now more money that you can use to buy even more AI servers. So I would love to hear if Google Cloud somehow talks about that, if there's an analyst that discusses that, as normally they kind of break it off in about a 4 to 6 years, depending on what company does it. Doing it all in 1 year, you're getting kind of that same thing, but now you're able to free up the free cash flow a little bit faster to kind of invest a little bit more. So that's something that I don't think many people are going to be listening to, but I hope there's a question about it.
Agreed. I agree. I think it is a massive decade of investment that we are heading into. And it's wild because we get to invest in that. So we got 3 minutes until this market closes. Thank you, everybody, for being here. For those that are here for the first time to an earnings call, welcome for being here. These tend to be fun. We treat it as our sport. We get to do this 4 times a year. And it is always important, in my opinion, if you're going to be investing in companies, to care about the earnings that they're putting up. It's not the end all be all. Some companies have good quarters, some companies have bad quarters. But as an active investor, you want to know what the company is doing. And as a community, we get to come together and see candlesticks go up and down, see if we make money, lose money. That's always fun. So very excited that everyone is here today. Jose, final question to you. Everyone in the chat, 80% of you said pump on Google. Only 53% of you say pump on Tesla. So most of you say it's going to be a little bit more of a dump on Tesla versus Google. Jose, Google, pump or dump? What do you think?
I'm saying pump on Google, but I'm hoping for a dump so I can buy more shares. But I think it's a pump. For Tesla, I think I'm gonna go with the sentiment as well. Maybe a little bit more bearish on Tesla for this earnings, right? Not for the overall long term, but for this earnings, I'm a little bit more bearish on Tesla.
Okay, so dump on Tesla for you, pump on Google. I'm giving the people what they want. I'm saying pump Google and pump Tessie. Pump Google, pump Tessie. Everyone's happy. Everyone should be happy. No, in general, I do think both can pump. But if I'm wrong, I'm wrong. And regardless, it's 1 quarter in a long journey to cover these companies. And hopefully we get some results that, will make everybody happy. All right, folks, here we go. We got 30 seconds left. If you're new to the channel, we ring a bell when the channel closes. Or not when the channel closes. I don't know if the channel's ever going to close. Hopefully the channel's open forever. When the bell closes, that doesn't make any sense either. See, this is earnings get you fired up and you can't talk, but that's not a good excuse because I can't talk every single day if you're an OG of the channel. When the market closes, we ring the bell and then we wait with anxiety to see if our net worth goes up or down. Thank you, everybody, for being here. Wednesday, July 23rd. 4 p.m. Ladies and gentlemen, we got Tesla and
close
Google.
That bell.
The stock market is now closed. And now we wait. So, Jose, how's the weather?
Pretty good, not too bad. I mean, hopefully we have some cool earnings coming out. I don't know what else is happening today.
Yeah, I don't know what else is happening. I'm in Jersey too, so I know it's pretty hot, but we are going to try to see what happens. All right, before we get into Tesla and Google, Palantir close of the day, 154.63, up about 3.73%. Not too bad. S&P, wow. She got a 634 close, guys. She hit 634 right at the bell. It was at 633.50 for the majority of the past hour. 634 all-time high. NVIDIA back to 170.78. You got Oklo, that's up about 9%. Nano Nuclear was up 7.8%. Again, Palantir 154. BMNR, a little bit of a sucky day for some of the Ethereum treasuries. Bitcoin right here, 118. Ethereum as well, I think closed under 3,600. 35.96, just there at 3,600. Coinbase right here below 400. You got Circle right here, 202. That's up 2%. SoFi was up 2.7. Not too bad. Robinhood, again, rough past couple days, but still Robinhood holding above 100. 102 is what you have on Hoodie. Big Bear AI, that was up 7%. S&P again up half or up almost 1%. Open Door Door kind of closed today, down about 20%. DNUT, another meme stock, that one was up 4.6. That one also came down from up 40%. GoPro was also up 40%. That one's only up 12.4%. And then Kohl's, which was up 40% yesterday, ended down 15% on the day. So some of that momentum coming out of the meme stocks. Hims, great day, up about 16%. Upstart right here, up 5%. Enphase, also crappy day, down about 14%. All right, Tesla and Google. Tesla and Google, in about a couple minutes, we should be getting the results on Tesla and Google. Let me know in the chat if you bought Tesla, sold Tesla, bought Google, sold Google, put some covered calls on the position, bought some puts, sold some puts. We're going to be getting these results any second, and then we are going to see how they react. I do think Google will be coming out before Tesla, and then we will get a better understanding of what we got. Rocket Lab, yup, got that close at $49, which has been really good for Rocket Lab. Got to 53 last week, now up 4.8% on the day. They were informed that they might be one of the key contractors or vendors for the Golden Dome. So that's another reason why Rocket Lab's been getting some momentum. Google, we got a green candle. We got a green candle. Now we got to wait until I think at least you're at 4 or 5% to see if it's legit. A lot of times this ends up reversing very quickly as the street is trying to figure out the earnings. I know Jose is looking for some of the numbers. You guys can be looking.
Yeah, looking here.
Yeah, Jose will let us know once he finds them. I'm looking for the top line numbers. Oh, we also have T-Mobile earnings. Okay, so T-Mobile beat by 6% on EPS, beat by 1% on revenue. EPS is up 14% year-over-year. Revenue's up 7%. T-Mobile, ticker symbol TMUS, that is up 4%. Nice to see. The communication providers having a good earnings. T-Mobile also has a deal with SpaceX, which is and Starlink, which is good. So T-Mobile right there up 4%. Google's losing that 2%. It's now 1.1 barely. Looking for the numbers. They should be coming in any second.
Yeah,
and then we
Stock Market News Twitter account has it.
He has it. Okay, let me go to him.
Yeah.
All right, here we go.
All around.
Okay, Google, we got a beat and a beat. We got a beat and a beat. 231 versus 216. That's a beat on EPS. Revenue 96.4 versus 93.7. That's a beat on revenue. You got a beat and a beat.
Yeah, it seems cloud revenue did really good as well. 3.6 when the market was about 13.1. So nice Google Cloud growth there. And overall, some exciting numbers.
Okay, I would say these are good numbers. I don't know how exciting they are. I mean,
good numbers are exciting.
No, 100%. They're exciting, but I don't know if it's pumped to 200 type of exciting. So I mean, this is not the 40% beat they had on EPS last time, that thanks to SpaceX. But I mean, Google's going red right here. It could flip any second and go up 5% if it wants. Good numbers. You could say great numbers. I don't know if it's enough to get the street excited.
I think here what we're going to have to wait in the earnings call is to tell us a little bit more about that Google Cloud revenue. They did mention that there's still supply constraint. Is that still the thing happening this earnings? Are they still supply constraint? And if they build more AI servers, will that be able to continue the overall cloud growth? So like you mentioned, maybe not great numbers for a pump, but as a long-term investor, it kind of continues to give you that bullish thesis that, look, things are okay. No, this AI carnage on demand on ad is not really here.
100%. If you're a long-term investor, these numbers look phenomenal. If you are looking for a short-term pump after it's up 30% in the past 2 months, it might not give you that. Google now tanking 2.4. I say tanking lightly because this could switch. I think a real tank would be near that 4 or 5%, but 2% is whatever. That's okay. Tesla numbers not out yet. We're still waiting for those, but Google down 2%. I am trying to get search revenue and see exactly how much that grew. Tesla, little green candle, but nothing too crazy. If anyone has the specifics on search revenue, that is something I would want to see. Okay, I think we have it, or I think we have some coverage. Let me pull this up. Yeah, here we go. All right, let's see. And we'll go to Tesla as soon as we get those numbers as well.
In bottom line numbers for Q2 revenue, it's coming in at $96.4 billion. That is a beat. The analyst consensus was $93.9 billion. On the bottom line, second quarter EPS was $2.31. That's also a beat. The market was looking for $2.18. We've also got another key figure, which is cloud revenue. That landed above analyst expectations, coming in at $13.62 billion versus the $13.1 billion analyst consensus. I'm going to keep digging through these numbers, and I'll come.
All right, so those are the numbers. They did 54.1 billion. I'm trying to figure out, is that what year-over-year percentage growth that is, because that'll also tell us a lot about what's going on with Google. Tesla moving a little bit after hours. No numbers yet. We should be getting it very soon. Google down 2.5.
I sent you the press release for Google, but revenue was up. We see Google Cloud Service revenue was up 12%, which includes kind of their ad business. Their Google Cloud was up 32%. Which is much better. I think last quarter they did like high 20s. So it grew into the 30s. It's back in that low 30s there for Google Cloud.
I think, dude, they increased their CapEx. Okay, so hold on. But do you know what their CapEx is for 2025? What's the last number?
75 billion, I think.
Exactly. They raised it to 85, folks. Wow. We are increasing our investment in CapEx to 8. That's why NVIDIA and Broadcom are pumping. I mean, even if Google
we said it at the beginning, we said it that it wouldn't be shocking if we saw that CapEx grow.
Yeah, even if Google's down, that is really good for NVIDIA and Broadcom. Services up 12%, cloud revenues 32%. That's their fastest growing. Overall revenues 14%. I don't have the exact search percentage year over year. I will try to find that because that one is very, very important. Oh, I have it right here. I can do the quick math. So 54.1 minus 48.5. That is growing 11.5%. That's not bad. That's not bad. Dude, they got almost 12% search revenue. Last year, that was 13%. That is only 1% below. Google should be up on that, dude. Google should be. That is a great number on search. Tesla, no numbers yet, but Tesla's up a little bit.
Yeah, I mean, as a long-term investor, again, this is great. You see that the ad search isn't dying because of any form of AI. You're seeing Google Cloud growing at massive levels. I think Street was expecting closer to like 27, 28% year-over-year growth. It gave us 32. And then as an AI investor, you see that capital expenditure. To me, if you're increasing your capital expenditure, even though they haven't said it, we haven't heard the earnings call. If they're talking about CapEx increasing, it means they still have way more demand on their cloud side, and they need to build up that infrastructure to meet up with that demand. So in theory, Google Cloud could be growing at even faster levels than it is right now.
Yeah, I think the two biggest things so far, guys, from Google down 2% right here is they're increasing CapEx, which is so freaking bullish if you own the semis, in particular NVIDIA and Broadcom. NVIDIA right here up almost 1%. And then two, if I was Sundar, the first thing I would put on the press release is that search is growing 11.5%. All the analysts have them at 8.5%, or at least most of the street consensus. Some of the more bullish analysts have them at around 11%. They even beat the bullish analysts because it's 11.5, not 11. That is phenomenal. That is not search is dead by any sense of the imagination. And if that's the narrative, then that's BS, because that can't be a real narrative. Search right there, up 11.7% year over year. We are waiting for Tesla. We should get it in a minute. We do have IBM. I forgot they were doing earnings, but let's look at IBM. That stock is down 3%. They beat revenue 17 billion versus 16.5. EPS 231. Free cash flow guidance 13.5 billion on IBM. IBM's down about 4.3%. All right, Tessie's next. Google gave us good numbers. The street is not rewarding it. Granted, the stock was up a ton going into the print, so it is what it is. It happens. Tesla, I don't know if we're going to get good numbers, and I don't know if the street's going to reward it, but we're going to find out in basically a minute. In basically 1 minute.
I saw some of the comments there asking why isn't AMD kind of pumping on this. Right now, Google is one of the few players that doesn't use AMD chips, so the market is more kind of giving that bullish sentiment towards kind of like your NVIDIA or Broadcom. But we can see now, you can kind of see maybe other big players are going to increase their CapEx if Google is doing it, and those other big players might increase their investments. So now we kind of see that pump happening here with AMD. So overall, very bullish as it starts this era that big cap, it's not going to be impossible for the other big tech players to announce a capital expenditure growth.
And Broadcom, all-time highs. It looks like the AI revolution is not stopping at all. And it's pretty incredible to kind of see how this is all playing out. So there you go. Broadcom right there up 3.3%. Tessie numbers should be out very soon. Tessie got a red candle. It's red, it's green. It is now red. It's flat, basically up 0.06. It was up 0.7. It looks like it wants to go further down. Now it's going down. Now it's down. Now it's down. Now it keeps going down. Can you please go up again? No, it's not. No, now it's going up. No, never mind. Now it's down. No, now it's up.
Keep saying please. Please.
Please. It's like an LLM, right? If you ask it nicely. Okay, now it's up. Now it's up. Jose, you get the numbers. I'm looking at the candle. Come on. Just turn around. Heaven is upwards. Hell is downwards. You want to go to heaven. Up 4.3. No, 0.4. 333. It's this is exactly what it did in Q1. Yep. It was flat.
Zero Hedge has the numbers right now. Tesla's second quarter revenue, 22.5 billion. It did beat a little, actually no, a small miss by about $150 million miss on the revenue. Adjusted earnings per share of 40 cents. It did miss by about 2 cents. But gross margins were a little bit higher than estimated, 17.2% versus 16.5%. So a small miss on the revenue, small miss on earnings per share, a small beat on gross margins. But pretty much, I think that's what we talked about at the beginning. We weren't expecting too much from this company, at least in these short results. Let's see what we get in forms of their actual presentation. Let's see if I can pull that up.
Dude, not too bad. 40 cents. That's what the street expected. Revenue 22.4 versus 22.1. Very small beat. EPS is down 23% year over year. Revenue's down 12%, but the street expected worse. And that's not what the street is getting. Tesla right here, although it's a very small green candle, it is green. Hit 338. Now it's at 335. Would not be surprised if it's flat. Would not be surprised if it goes down, but it's not absolutely disgusting. Gross margin 17.2. Street thought it would be 16.5. I mean, again, expectations were low, and at the very minimum, Tesla's beating some of those expectations. It's up to Elon, I guess, to see if this call can help pump it up.
I just sent you the link to the presentation if we want to open that in a bit.
Okay, let me see if we can get some coverage real quick on Tesla, and then we'll go deeper into the numbers. Google, again, great earnings so far. We'll see if that can reverse. We got the call in about 15 minutes from Googs, and then Tesla at 5:30. Here is some coverage on Tessie. Then Jose and I will go through the deck ourselves and see what we can get.
Well, we've got more earnings to bring you. Tesla results are out. Bill LeBeau has the numbers.
Morgan, this is a miss on the top and the bottom line for the second quarter for Tesla. The company earning 40 cents a share. The street was expecting 43 cents a share.
Some parts of the street were expecting 40 cents. So, I mean, like, you could call it a miss, but there are other analysts that expected 40 cents. So nothing too crazy there.
Revenue coming in at 22.5 billion, a little shy of the estimate of 22.736 billion. Just going through the investor report right now, we don't have a whole lot of details, but they do say that they have sufficient liquidity to fund the product roadmap that they have laid out, and that the plans for a new, lower cost, more affordable vehicle, if you will, coming to production this year, remain on track. What does that mean? Well, you've only got so many months left in this year, but that's the latest in terms of what we're seeing with the Tesla report. Don't forget, we're going to have more in a little bit. We'll come back to you guys as we get more details, especially with things like the automotive gross margin, excluding zero-emission vehicle credits. But the conference call is really what people will be focused on in terms of what Elon Musk has to say when it comes to robotaxi.
And we'll get that call in a bit. Tesla said its upcoming Cybercab will adopt the company's revolutionary unbox manufacturing strategy with volume production scheduled to begin in 2026. And they said that in the last call, so it looks like no difference there. Before we go through the numbers, let's just take a look at some of these stocks in the after hours. So Tesla now is getting a little bit of a pump, 1.5, even with the pseudo miss on EPS, which realistically came in line with expectations. Even if it was a slight miss, the street is not caring too much. Again, these numbers are not good by any sense. I mean, it's negative growth year over year. It's just not as bad as I think what some of the street thought would happen. Google is trying to go green, but it's still down. It's pretty incredible, right, Jose? Google crushes and it's down. Tesla doesn't crush, but they crushed against expectations and it's red.
But like you mentioned, right? I think you said Google had a kind of a nice run up in the past few weeks or so. I think one thing that Tesla investors might be a little bit excited was in the slideshow, it does talk about kind of that lower volume, lower cost product is still. It was supposed to happen this first half, but now they're saying it's happening in the second half. So at least we know it hasn't been thrown away, and that should still come out for maybe a new potential market for them.
Chipotle is down 7%. IBM's down 3%. T-Mobile is green. So T-Mobile and Tesla, T-Mobile up 5% are the ones that are leading right now after hours. Broadcom's up 3% based on what Google said. NVIDIA's up 0.5%, and Google still fighting to get back into the green, while Tesla continues to stay green, up about 1%. All right, let's get into the deck. We got about 15 minutes until, or 14 minutes until we get to the call. I'm just going to read their summary real quick, and then we'll get into some of the numbers. This is from Tesla's Q2 deck. Q2 2025 was a seminal point in Tesla's history, the beginning of our transition from leading the electric vehicle and renewable energy industries to also becoming a leader in AI, robotics, and related services. Our first robotaxi service launched in Austin in June. While the service is limited in initial scope, we believe our approach to autonomy, a camera-only architecture with neural networks trained on data from our global fleet of millions of vehicles, allows us to continually improve safety and improve profitability. We continue to expand our vehicle offering, including the first builds of a more affordable model in June with our volume production plan for the second half of 2025. Additionally, we continue to the development of Semi and Cybercab, both slated for 2026. The energy business is more critical than ever. The availability of clean, reliable energy is necessary for economic growth and an imperative for the development and commercialization of AI-enabled products and services. As electricity demand grows, our Megapack product helps to increase the utilization of existing generation and transmission capacity, resulting in a more efficient use of our electric grid. Despite a sustained, uncertain macroeconomic environment relating from shifting tariffs to unclear impacts from changes to fiscal policy and political sentiment, we continue to make high-value investments in CapEx and R&D. While ensuring a strong balance sheet, our priorities remain the same: delivering affordable and compelling autonomy-capable models that maximize our global fleet of vehicles as our autonomy software continues to rapidly progress, growing the energy business and advancing our robotics efforts. That is a summary from Tessie. We know most of the delivery numbers already, so we'll look at some of the other stuff. On product, they say our focus remains on prudently growing our vehicle volumes in a CapEx-efficient manner by using our existing vehicle production capacity before building new lines. Plans for new vehicles that will launch in 2025 remain on track, including a production of an affordable model in H1 2025. Okay, that doesn't make any sense because we're done with H1 2025. We are literally in H2, unless they're saying
it's weird.
Someone forgot to... Someone forgot to change the copy and paste on that one. Our purpose-built robotaxi product will continue to pursue a revolutionary unboxed manufacturing strategy, and that'll start in 2026. One
thing I'm curious about is if you're looking at the numbers, free cash flow took a massive hit this quarter. I wonder if they talk a little bit about that. If you go to the next slide, I think it was down about 86%. Yeah, you can see free cash flow was about 146. Down 89%. So I'm gonna look through the slide, maybe some indication of where it's happening, or is it just the loss of kind of a weaker revenue market right now?
That is, who has a good explanation on why free cash flow took that hit? Does that have to do with carbon credits or anything like that? Because I don't think that has an effect until the end of the year. 89% below, that can't just be due to vehicle sales, and their margins were better this quarter, so I don't think it's because of gross margins. It looks like there's something else going on right there. Tesla now not going red, but definitely losing that initial 2% move. And it is a bit flat. Farzad, shout out to you right there. Call us at 5:30 if you have time. They started production on cheaper model and likely delayed to Q4 due to EV credit expiring in Q3. Okay, that sounds good. So that also is a little bit of an explanation on why they still included H1 2025 if they did start production of that less affordable or more affordable vehicle in terms of the Model Y or even the Model 3. NVIDIA right here, that's up about 0.5%. AMD's up 0.5%. Broadcom's up 2.9%. And then Tessie's still up 0.5%. Chipotle's down 8%. ServiceNow, they also had earnings. Forgot about that. That's up 7%. Big enterprise AI name. That one is also up 7%. Here's a quick overview on Google again for those that missed it. These were the numbers. EPS 231 versus 227, revenue 96.4 versus 93, cloud 13, advertising 71, search. I mean, I don't think you can ask for you can't ask for better growth than 11.7%. 54 billion, operating margins 32%, and net income 28.2. Jose, which one do you think had a better earnings based on these numbers, Google or Tesla? As we dive,
I think as the now numbers, Google's numbers were insane. Okay, not insane. They were great. It kind of eliminates that fear theory about the AI market and about some of the other players. So I really like it. And obviously, as an AI investor, seeing CapEx grow is something that makes me bullish in this overall market still.
Sundar Pichai said, we had a standout quarter with robust growth across the company. We are leading at the frontier of AI and shipping at an incredible pace. AI is positively impacting every part of our business, driving strong momentum. Search delivered double-digit revenue growth, and our new features like AI overviews and AI mode are performing well. We continue to see strong performance in YouTube as well as subscription offerings, and cloud has grown strong in revenues, backlog, and profitability. Its annual revenue run rate is now more than $50 billion. With the strong and growing demand for our cloud products and services, we are increasing CapEx to $85 billion. Operating margins are the same year over year. Operating income has increased as revenue has increased, 31 billion versus 27 billion. And their net income, goodness gracious, dude, $28 billion of pure profit is what this company does. 28 billion pure profit. And the street's treating them at 18 times earnings.
I think this is where Google going first, it kind of sets the tone for the other cloud service providers. We see that Google beat on cloud revenue growth versus what the market was expecting. Now, is this growth due to it taking market share from AWS or from Microsoft Azure, or is just the demand that crazy? Regardless, now you have to see both Amazon and Microsoft announce numbers better than what the Wall Street expects. If not, they're going to be seen as they're the ones losing that market share to Google. So I think that's what's nice about maybe going first. You kind of set the tone for the rest of the market.
I agree. I think it is setting the tone the right way. Real quick, let's see why Chipotle is getting hammered after hours.
Line at 33 cents adjusted. Revenues just slightly below estimates, 3.06 billion for Q2. Analysts were looking for 3.11 billion. Same store sales came in lower than expected, down 4%. Analysts were projecting a fall of 2.9%. This is its second consecutive contraction and also the biggest since the second quarter of 2020. Chipotle, though, reporting a return to positive comparable sales and transactions in the month of June. Its restaurant level margins right in line at 27.4%. The company noted inflation across several of its key ingredients, primarily steak and chicken. For the full year, it's cutting guidance to about flat for full year comp sales. That's down from the prior guidance of low single-digit growth. In a statement, CEO Scott Boatwright said the company was seeing its momentum build as it rolled out its summer marketing initiatives and comparisons ease. You can see the stock is down.
All right, so it looks like maybe Kava or some of these other companies are taking a little bit of market share away from Chipotle. That one is down. Tesla goes red. Tesla goes red. T-Mobile's holding 5%. ServiceNow is holding 6%. Google, wow, they're taking it down 2%. Guys, I mean, honestly, for those that are confused, I think it really is a Netflix situation where the stock ran up going into earnings, because I cannot imagine how those numbers, especially search, are bearish and you would sell the stock on that. So I think it's just people taking profits. Tesla, you can understand, but Tesla's not as red as Google, down about 2% right here.
Yeah. I'm extremely sad about Chipotle news because I feel like now when I go to Chipotle, they're going to be light on their food. So they have to make those margins back up.
They have to make those margins somehow. That's weird, man. This was a great quarter by the Googs. I mean, my biggest fear was search, and the fact that they were able to pull that up to almost year-over-year growths being break even, which, you know, is way better than what people expected, because the narrative is that search is dead. So there's no way that search could be growing. It's not growing at 13%, but at 11.7, it's pretty damn close. So I would not be surprised if when the market opens tomorrow, this one shoots back up. NVIDIA's up a little bit based on that CapEx, and then Broadcom up 3% on the 85 billion for increasing on CapEx. Okay, going deeper into some of the Tesla numbers, we still have this deck. We have until 5:30 to kind of see what happens here. Total revenue decreased 12% year over year. They said revenue was affected by decline in vehicle deliveries, lower regulatory credit revenue that could also be hurting free cash flow, reduced vehicle average selling price. Those were the incentives they did to get people to buy the car in the first place. Decline in energy generation and storage revenue due to lower average selling price, and growth in services and other. Okay, profitability was hit with lower regulatory credit revenue, increase in OPEX, decline in vehicle deliveries, increase in SBC. What helped is decrease in some of their restructuring charges, lower cost per vehicle, and growth in energy generation and storage gross profit. They have $37 billion in cash,
which is wild.
Yeah, and they're not doing buybacks, so they have plenty of cash to do what they need to do. Their cost of goods, I would like to see if anyone has the COGS, because last quarter it was one of the lowest COGS they ever had. Maybe if that one's coming down, that's also something bullish we can look to as well. All right, that's what you got. That's what you got on some of these earnings. Chipotle's down. ServiceNow, let's take a look at those results real quick. That one is surging after hours, up almost 5% or almost 7% right here.
Q2 beat on the top and bottom line. The company's raising guidance. I spoke with CEO Bill McDermott about the results as well. First, the quarter revenue was $3.22 billion versus $3.12 expected. Non-GAAP EPS $4.09 versus $3.57. On the guide, ServiceNow promising Q3 subscription revenue of $3.26 billion to $3.27 billion. So that's $3.275 at the midpoint versus expectations of $3.21 billion. Operating margin and backlog both beat as well. CEO Bill McDermott told me about the quarter. On AI demand, he said the AI control tower, which is that control tower that governs, monitors, and optimizes the agentic workforce on one platform, achieved its full-year operating plan in 60 days. The silos and the industrial software complex of the 20th century is collapsing into a cross-functional way of working. These organization charts are going to get busted up in these enterprises, and AI is going to turn them upside down. On industries where ServiceNow's outperformance came from, he said, unbelievable growth in transportation and logistics. They've got to deal with a lot of things in real time. Technology, media, and telecom. So these two respectively were up. One was 100%, the other was 70% year over year. And retail, hospitality, energy, and utilities were all up 50% year on year. So what you're seeing is the AI ability to take OpEx down is driving all these companies to act.
That's also increasing those companies' margins, which is why companies like Palantir are getting as much demand. It's really good to see ServiceNow growing at the level they're growing at, because that is very good for companies in the enterprise software space like Palantir, that their entire pitch is that AI is going to change your business. And it looks like ServiceNow is executing on that as well. NVIDIA right here, 170. Tesla goes down, 1.4. Tesla goes down.
I think someone in your chat said it pretty good. I think it was David. They mentioned that ServiceNow is what kind of Salesforce wants to be. I mean, you're kind of seeing that AI agent grow. And I think it's a great indication, right? They talk about how it's not that with AI, you're going to see massive revenue growth from these other players. You're actually going to see more of a better margins due to operating expenses going down, just because you're using more AI to kind of do a lot of these tasks. And I think that's how investors should start looking at some of these AI companies or some of these players using AI. It's not that you expect their revenue growth to grow dramatically. What you're expecting is that free cash flow, that operating cash flow, that earnings per share to grow at a faster rate than revenue. So I think that's how most investors should be looking at kind of this AI market right now.
I would agree. We got 2 minutes until the call starts for Google. By the way, this picture makes me very happy. We got Mr. Tom Lee taking a picture with Jensen Huang. Very cool to see that. NVIDIA is a granny shot in Tom Lee's ETF. So you got two of them meeting at the AI Summit in DC. All right, last question for you, Jose. What do you expect Sundar to say on this call?
Gemini is killing it. AI overviews is doing really well, and Google Cloud is still compute constrained, so they need to invest more. And I would love to hear maybe some more of some of the acquisitions. They kind of did that crazy acquisition of that failed OpenAI company. We'd love to hear some of the mindset that happened with that and how they acquired some talent. And is that the new normal? Are we expected to see massive amount of money going into some of these AI engineers and AI talent? But I think he's just going to showcase more strength from Gemini in general.
Agreed. I expect them to explain that there is going to be tons of momentum when it comes to AI growth. Also, that opening statement inside of his press release was pretty damn bullish. They increased CapEx, they feel good with search, and they understand that cloud is growing at a pretty constructive way. So I expect there to be some confidence from Sundar. I know some people have criticized his communication, but the earnings results are there for him to be pretty confident because the numbers are backing him up. And now it's time for him to communicate that to the street. And maybe this negative 1.4 turns into a positive 1.4 if we can get some good results from Google on the call. Tesla right here down about 1%. Google down 1.4. Grab is up 1.2 after hours. Palantir is down about 0.5%. And then ServiceNow is up 6.3. T-Mobile's up 5. Chipotle is now down 9%. That one is getting hit. All right, Google, let's get into it.
2025 earnings conference call. At this time, all participants are in a listen-only mode. After the speaker presentation, there will be a question and answer session. To ask a question during this session, you will need to press star 1 on your telephone. I would now like to hand the conference over to your speaker today, Jim Friedland, Head of Investor Relations. Please go ahead.
Thank you. Good afternoon, everyone, and welcome to Alphabet's second quarter 2025 earnings conference call. With us today are Sundar Pichai, Philip Schindler, and Anat Ashkenazi. Now, I'll quickly cover the safe harbor. Some of the statements that we make today regarding our business, operations, and financial performance may be considered forward-looking. Such statements are based on current expectations and assumptions that are subject to a number of risks and uncertainties. Actual results could differ materially. Please refer to our Forms 10-K and 10-Q, including the risk factors. We undertake no obligation to update any forward-looking statement. During this call, we will present both GAAP and non-GAAP financial measures. A reconciliation of non-GAAP to GAAP measures is included in today's earnings press release, which is distributed and available to the public through our investor relations website located at abc.xyz/investor. Our comments will be on year-over-year comparisons unless we state otherwise. And now, I'll turn the call over to Sundar.
Thanks, Jim. Good afternoon, everyone. Q2 was a standout quarter for us, with robust growth across the company. As you saw at I/O, we are leading at the frontier of AI and shipping at an incredible pace. AI is positively impacting every part of the business, driving strong momentum. This quarter, Search delivered double-digit revenue growth. Our new search features continue to perform well. AI Mode has launched in the US and India and is going well, while AI Overviews now has over 2 billion monthly users across more than 200 countries and territories and 40 languages. I'll give some more details on Search in a moment. We continue to see strong performance in YouTube as well as subscriptions, reflecting great momentum across these high-growth businesses. In the US, Shorts now earn as much revenue per watch hour as traditional in-stream on YouTube. And in some countries, it now even exceeds in-streams rate. Cloud had another great quarter of strong growth in revenues, backlog, and profitability. Its annual revenue run rate is now more than $50 billion. We are seeing significant demand for our comprehensive AI product portfolio. Of course, this is all possible because of the long-term investments we have made in our differentiated, full-stack approach to AI. This spans AI infrastructure, world-class research, models and tooling, and our products and platforms that brings AI to people all over the world. I'll briefly touch on the AI stack before turning to quarterly highlights. First, AI infrastructure. We operate the leading global network of AI-optimized data centers and cloud regions. We also offer the industry's widest range of TPUs and GPUs, along with storage and software built on top. That's why nearly all Gen AI unicorns use Google Cloud. And it's why a growing number, including leading AI research labs like Safe Superintelligence and Physical Intelligence, use TPUs specifically. Our AI infrastructure investments are crucial to meeting the growth and demand from cloud customers. Next, world-class AI research, including models and tooling. We continue to expand our Gemini 2.5 family of hybrid reasoning models, which provide industry-leading performance in nearly every major benchmark. In addition to improving our popular workhorse model, Flash, we debuted an extremely fast Flashlight version. We achieved gold medal level performance in the International Math Olympiad using an advanced version of Gemini with DeepThink. We can't wait to bring DeepThink to users soon. We have some of the best models available today at every price point. Our 2.5 models have been a catalyst for growth, and 9 million developers have now built with Gemini. I also want to mention Veo 3, our state-of-the-art video generation model. It's been a viral hit, with people sharing clips created in the Gemini app and with our new AI filmmaking tool, Flow. Since May, over 70 million videos have been generated using Veo 3. And we recently introduced a feature in the Gemini app to turn photos into videos, which people absolutely love. It's also rolling out to Google Photos users starting today. Third, our products and platforms. We are bringing AI to all our users and partners through surfaces like Workspace, Chrome, and more. The growth in usage has been incredible. At I/O in May, we announced that we processed 480 trillion monthly tokens across our surfaces. Since then, we have doubled that number, now processing over 980 trillion monthly tokens, a remarkable increase. The Gemini app now has more than 450 million monthly active users, and we continue to see strong growth and engagement, with daily requests growing over 50% from Q1. In June alone, over 50 million people used AI-powered meeting notes in Google Meet. And powered by VO3, our new short video product in Workspace called Google Vids reached nearly 1 million monthly active users. This month at Samsung Galaxy Unpacked, we announced new Android and AI features that are available on Samsung's latest devices. And we are really pleased with the growth in subscriptions, which got a boost from our Google AI Pro and Ultra plans. Now, some key highlights from Search, Cloud, YouTube, and Waymo for the quarter. First up, this is an incredibly exciting moment for Search. We see AI powering an expansion in how people are searching for and accessing information, unlocking completely new kinds of questions you can ask Google. Overall queries and commercial queries on Search continue to grow year over year. And our new AI experiences significantly contributed to this increase in usage. We are also seeing that our AI features cause users to search more as they learn that search can meet more of their needs. That's especially true for younger users. Let me go deeper on our new search experiences. We know how popular AI overviews are because they are now driving over 10% more queries globally for the types of queries that show them. And this growth continues to increase over time. AI overviews are now powered by Gemini 2.5, delivering the fastest AI responses in the industry. We also saw strong growth in the use of multimodal search, particularly the combination of Lens or Circle to Search together with AI overviews. This growth was most pronounced among younger users. Our new end-to-end AI search experience, AI Mode, continues to receive very positive feedback, particularly for longer and more complex questions. It's still rolling out, but already has over 100 million monthly active users in the US and India. We plan to keep enhancing the AI Mode experience for users by shipping great features fast. That includes our advanced research tool, Deep Search, and more personalized responses. Next, Google Cloud. We see strong customer demand driven by our product differentiation and our comprehensive AI product portfolio. 4 stats show this. 1, the number of deals over $250 million, doubling year over year. 2, in the first half of 2025, we signed the same number of deals over $1 billion that we did in all of 2024. 3, the number of new GCP customers increased by nearly 28% quarter over quarter. 4, more than 85,000 enterprises, including LVMH, Salesforce, and Singapore's DBS Bank, now built with Gemini, driving a 35x growth in Gemini usage year over year. Our models are served on our AI infrastructure, which offers industry-leading performance and cost efficiency for both training and inference. Along with our AI accelerators, we introduced new innovations in storage, including Anywhere Cache, which improves inference latency by up to 70%, and Rapid Storage, which delivers a 5x improvement in latency compared to leading hyperscalers. In addition, we have optimized AI software packages, including PyTorch and JAX, with full open source supports for various AI training and serving demands. We've also integrated AI agents deeply into each of our cloud products. Wayfair is leveraging our databases integrated with AI to streamline data pipelines and deliver more personalized customer experiences. Mattel is leveraging our Gemini-powered data agents and BigQuery to review and act on product feedback more quickly. Target is using our Gemini-powered threat intelligence and security operations agents to improve cybersecurity. Capgemini is utilizing our AI software engineering agents to deliver higher quality software faster by automating tasks from code generation to testing. And BBVA says Gemini in Google Workspace is saving employees nearly 3 hours per week by automating repetitive tasks. It's now rolling it out to 100,000 employees globally. We are also focused on building a flourishing AI agent ecosystem. We introduced an open source agent development kit, which now has over 1 million downloads in less than 4 months. We also introduced Agent Space, an open and interoperable enterprise chat, search, and agent platform. Gordon Food Service is bringing Agent Space to its US employees, which is enabling better, more efficient decision-making. And over 1 million subscriptions have been booked for Agent Space ahead of its general availability. Turning now to YouTube. Nielsen data shows YouTube has led US streaming watch time for over 2 years. A generation that grew up with YouTube on their devices is now increasingly watching their favorite creators and content on their televisions. That includes billions of sports fans too. Globally, they consume more than 40 billion hours of sports content on YouTube annually. And in September, we'll stream the NFL's first Friday game of the season live from Brazil. From sports to shorts, we now average over 200 billion daily views on YouTube Shorts. AI is helping improve our recommendations and auto dubbing, which translates to better returns for creators and brands by dramatically increasing the potential audiences they can reach. And today we began rolling out a whole raft of new AI tools for creators on YouTube Shorts. Finally, YouTube continues to diversify its subscription options, recently expanding its premium light offerings to 15 new countries with more to come. And lastly, Waymo continues to scale and expand to safely serve more riders in more places. Last month, Waymo launched in Atlanta, more than doubled its Austin service territory, and expanded its Los Angeles and San Francisco Bay Area territories by approximately 50%. Waymo also launched teen accounts, starting with riders aged 14 to 17 in Phoenix. Overall, great momentum here. The Waymo driver has now autonomously driven over 100 million miles on public roads. And the team is testing across more than 10 cities this year, including New York and Philadelphia. We hope to serve riders in all 10 in the future. As I said, a standout quarter. A big thank you, as always, to our employees and partners for an amazing Q2. Philip, over to you.
Thanks, Sundar, and hello, everyone. I'll quickly cover performance for Google services for the quarter, then structure the rest of my remarks around the great progress we're delivering across search, ads, YouTube, and partnerships. Google services revenues were $83 billion for the quarter, up 12% year-on-year, driven by strong growth in search and YouTube, partially offset by year-on-year decline in network revenues. To add some further color to our results, the 12% increase in search and other revenues was led by growth across all verticals, with the largest contributions from retail and financial services. YouTube saw similar performance across verticals. Its 13% growth in advertising revenues was driven by direct response, followed by brand. Starting with search and other revenues, which delivered over $54 billion in revenue for the quarter. Shifts like AI are what propels our industry forward. Gemini's native multimodality is helping bring the offline audio and visual world back into the online world, creating a number of opportunities for search. Let me share a few examples. Take visual queries. Google Lens searches are one of the fastest growing query types on search and grew 70% since this time last year. The majority of Lens searches are incremental, and we're seeing healthy growth for shopping queries using Lens. And you can obviously take this to the next level by moving from image to video-based capabilities like Search Live. And then there's Circle to Search, which is now on over 300 million Android devices. We've been adding capabilities to help people explore complex topics and ask follow-up questions without switching apps. For example, gamers can now use Circle to Search while playing mobile games to see an AI overview or answers. And just last week, we brought a new agentic capability directly into search for all US users with AI-powered calling to local businesses. Finally, shopping, where in Q2 we introduced a virtual try-on experience for Search Labs users in the US. Now people can try billions of clothing products on themselves virtually. Early results and engagement have been extremely positive, particularly with Gen Z users, and we'll be bringing this functionality to all US users imminently. All these innovations are opening up completely new ways for people to use technology, bringing the offline world into the online world in ways that simply have not been possible before. Add in our amazing AI translation capabilities and just imagine the possibilities. People can access more content in the language, and businesses, large and small, international or local, can reach even more customers. I'm excited about how all of these elements will come together and the opportunities ahead of us in search. Moving to ads, where our strategy to reinvent the entire marketing process with AI is delivering value for our customers and our business. Last quarter, we introduced AI Max in Search, a new suite of AI-powered features in existing search campaigns. Advertisers that activate AI Max in Search campaigns typically see 14% more conversions. On media buying, smart bidding exploration, the biggest update to bidding strategy in a decade, brings better performance to advertisers by allowing them to bid on less obvious but potentially higher value queries more often. Campaigns using smart bidding exploration see a 19% increase in conversions on average. Demand gen continues to drive revenue growth and deliver measurable impact for our customers. As an example, Depop, Etsy's resale clothing marketplace, used a Shorts-only demand gen campaign to drive new customers to the site. Shorts drove 80% higher brand lift and double click-through rates versus benchmarks. On creatives, we launched Asset Studio, using our latest models to help businesses, large and small, generate creative assets. Small businesses benefit from top quality assets and deployment scaling capabilities, while larger businesses can go faster from proof of concept to launch and resize at lower costs. Over 2 million advertisers now use Google's AI-powered asset generation tools to run ads, a 50% increase on this time last year. Turning to YouTube, where we saw continued strong revenue growth, driven by direct response followed by brand. YouTube creators are connected to the global zeitgeist and trusted by their audiences like no others. As part of Brand Connect, we launched Creator Partnership Hub, which allows brands to more easily work with the right creators and tap into cultural moments. We introduced Veo 3, photo to video and generative effects to Shorts, making content creation easier and offering unexplored avenues for creativity. We're seeing both the volume and the price of ads and Shorts increase, particularly in developed markets. The feed-based nature of the product allows for more ad opportunities on average, and this growth is further supported by ad formats native to Shorts, AI-powered ad creative resizing tools, improved ad targeting, and the rise in viewer engagement. McDonald's USA harnessed the influence of YouTube creators to ignite awareness for the Minecraft movie meal. It leveraged YouTube Shorts partnership ads to increase its reach, generating a 3.3 times higher view-through rate than the industry benchmark. Finally, on CTV, where the momentum continues. According to the Gauge report by Nielsen, YouTube has been #1 in streaming watch time in the US for more than 2 years, hitting a record high of 12.8% of total TV viewing in June 2025. In the past 12 months, YouTube ads viewed on CTV screens drove over 1 billion conversions. We saw strong growth in retail thanks to CTV shopping ads, which allows viewers to shop directly via QR codes, helping us leverage direct marketing opportunities. As always, I'll wrap up with the momentum we're seeing in partnerships, where customers increasingly recognize the strength and breadth of Google's ability to help them transform their business with AI. For instance, a new partnership with PayPal will improve the digital commerce experience for their merchants and customers. PayPal will expand its Google Cloud adoption for AI-driven recommendations, transaction processing, and enhanced security. The partnership also broadens the availability and functionality of PayPal's payment services and capabilities across a range of Google products. In closing, I'd like to thank Googlers everywhere for their contributions and commitment to our success, and to our customers and partners for their continued trust. Anat, over to you.
Thank you, Philip. My comments will focus on year-over-year comparisons for the second quarter, unless I state otherwise. I will start with results at the Alphabet level, and will then cover our segment results. I'll end with some commentary on our outlook for the second half of 2025. We had another solid quarter in Q2. Consolidated revenue of $96.4 billion increased by 14%, or 13% in constant currency. Search and YouTube advertising, subscription platforms and devices, and Google Cloud each had double-digit revenue growth this quarter, reflecting strong momentum across the business. Total cost of revenue was $39 billion, up 10%. Tech was $14.7 billion, up 10%, And other costs of revenue was $24.3 billion, up 10%, with the increase primarily driven by content acquisition costs, largely for YouTube, followed by depreciation. Total operating expenses increased 20% to $26.1 billion. The biggest driver of growth was expense for legal and other matters, which reflected the impact of $1.4 billion charge related to a settlement in principle of certain legal matters. R&D investments increased by 16%, primarily driven by increases in compensation and depreciation expenses. Sales and marketing expenses increased 5%, primarily reflecting an increase in advertising and promotional expenses. Operating income increased 14% this quarter to $31.3 billion, and operating margin was 32.4%. Operating margin benefited from strong revenue growth and continued efficiencies in our expense base, partially offset by the legal charge I mentioned earlier, and a significant increase in depreciation expense. Net income increased 19% to $28.2 billion, and earnings per share increased 22% to $2.31. We generated free cash flow of $5.3 billion in the second quarter and $66.7 billion for the trailing 12 months. Free cash flow in the second quarter was affected by a sizable sequential increase in CapEx and cash tax payments as we make federal tax payments in the second quarter for both Q1 and Q2. We ended the quarter with $95 billion in cash and marketable securities. Turning to segment results, Google Services revenues increased 12% to $82.5 billion, reflecting strength in Google Search and YouTube advertising and subscriptions. Google Search and other revenues increased by 12% to $54.2 billion. Search and other revenues delivered growth across all verticals, with the largest contributions coming from retail and financial services. YouTube advertising revenues increased 13% to $9.8 billion, driven by direct response advertising, followed by brand. Network advertising revenue of $7.4 billion were down 1%. Subscription, platforms, and devices revenues increased 20% to $11.2 billion, primarily reflecting growth in subscription revenues. This growth was driven by YouTube subscription offerings, followed by Google One, with growth in paid subscriptions being the biggest driver of revenue growth. Google Service operating income increased 11% to $33.1 billion. Operating margin was flat year-on-year at 40.1%, as healthy revenue growth and continued efficiency in our expense base were partially offset by the legal charge I mentioned earlier. Turning to the Google Cloud segment, which delivered very strong results this quarter. Revenues increased by 32% to $13.6 billion in the second quarter, reflecting growth in GCP across core and AI products at the rate that was much higher than Cloud's overall revenue growth, and growth in Google Workspace, driven by an increase in average revenue per seat and the number of seats. Google Cloud operating income increased to $2.8 billion, and operating margin increased from 11.3% to 20.7%. The expansion in cloud operating margin was driven by strong revenue performance and continued efficiencies in our expense base, partially offset by higher technical infrastructure usage costs, which includes the associated depreciation. As we ramp our AI investments, we continue to focus on driving improvements in productivity and efficiency to offset growth in technical infrastructure-related expenses, particularly from higher depreciation. Google Cloud backlog increased 18% sequentially in Q2 and 38% year-over-year, reaching $106 billion at the end of the quarter. This growth was driven by strong demand for our products and services from both new and existing customers. As Sundar mentioned, we have signed multiple billion-dollar-plus deals in the first half of the year. As to our other bets, in the second quarter, revenue were $373 million, and operating loss was $1.2 billion. Within other bets, we're allocating more resources to businesses like Waymo, where we see opportunities to create additional value. With respect to CapEx, in the second quarter, our CapEx was $22.4 billion. The vast majority of our CapEx was invested in technical infrastructure, with approximately 2/3 of investments in servers and 1/3 in data centers and networking equipment. In Q2, we returned capital to shareholders through repurchase of stock of $13.6 billion and dividend payments of $2.5 billion. Turning to our outlook, I would like to provide some commentary on several factors that will impact our business performance in the second half of 2025, as well as an updated outlook for full-year CapEx. First, in terms of revenues, we're pleased with the overall momentum we're seeing across the business. At current spot rates, we could see a tailwind to our revenue in Q3. However, volatility in exchange rates could affect the impact of FX on Q3 revenue. As for our segments, in Google Services, advertising revenues in the second half of 2025 will be affected by the following: the continued lapping of the strength we experienced in financial service verticals throughout 2024, and year-over-year comparisons will be negatively impacted by the strong spend on U.S. election in the second half of 2024, particularly on YouTube. In cloud, as I mentioned, the demand for our products is high, as evidenced by the continued revenue growth and the cloud backlog of $106 billion. While we have been working hard to increase capacity and have improved the pace of server deployment, we expect to remain in a tight demand-supply environment going into 2026. Moving to investments, given the strong demand for our cloud products and services, we now expect to invest approximately $85 billion in CapEx in 2025, up from a previous estimate of $75 billion. Our updated outlook reflects additional investment in servers, the timing of delivery of servers, and an acceleration in the pace of data center construction, primarily to meet cloud customer demand. Looking out to 2026, we expect a further increase in CapEx due to the demand we're seeing from customers, as well as growth opportunities across the company. We will provide more details on the 2026 CapEx outlook on a future earnings call. In terms of expenses, first, as I mentioned on our previous earnings call, the significant increase in our investments in CapEx over the past few years will continue to put pressure on the P&L, primarily in the form of higher depreciation. In the second quarter, depreciation increased $1.3 billion year-over-year to $5 billion, reflecting a growth rate of 35%. Given the recent increase in CapEx investments, we expect the growth rate in depreciation to accelerate further in Q3. Second, as we've previously said, we expect some headcount growth in 2025 in key investment areas. In the third quarter, we expect a sequential increase in total headcount additions, due in part to the hiring of new graduates. And third, Q3 will reflect the expense associated with the upcoming August launch of the new Pixel family of products. In conclusion, as you heard from Sundar and Philip, we're pleased with the momentum in the business and excited about the pace of innovation. Our full-stack approach, which combines AI infrastructure, AI research, and AI products and platforms, position us well to deliver new products and services across the company. We're seeing great momentum with our AI efforts, as demonstrated by the increase in cumulative token processed. Search revenues are seeing healthy growth, with features like AI overviews, AI mode, and lens offering new ways for users to access information. Cloud has reached an annual revenue run rate of more than $50 billion and is delivering margin expansion while continuing to invest to meet customer demand. And YouTube has expanded its addressable market by building new services like Shorts, which now averages over 200 billion daily views. We're excited to see the value our products and services are bringing to customers and partners around the globe. Now I'll turn the call over to the operator, and Sundar and Philip and I will take your questions.
Q&A.
Thank you. As a reminder, to ask a question, you will need to press *1 on your telephone. To prevent any background noise, we ask that you please mute your line once your question has been stated. Your first question comes from Eric Sheridan with Goldman Sachs. Your line is now open.
Thank you so much for taking the question. Maybe one for Sundar and one for Philip. Sundar, when you think about the journey you're on with respect to the evolution of products and platforms, how do you think about some of the implications of changed consumer behavior and how investors should think about that from the volume perspective versus the monetization perspective? Because I think there's a lot of longstanding dynamics out there about clicks and click monetization that might be very different when you look out over the next 3 to 5 years. And Philip, when you think about the evolution of YouTube, You made a number of comments there about subscription revenue. I'm just curious how you think about the mix of advertising versus subscription and what some of your key learnings might have been as the subscription side of the business continues to scale. Thank you.
Thanks, Eric. Appreciate the question. I do think looking ahead, based on everything we are seeing, it's people are excited about AI. They're adopting it well across our products. For me, just seeing multimodality, how people have modified their behavior to include images, both through Lens and Circle to Search, seamlessly as part of interacting with Google. Our early indications that people are going to be adopting through these moments very, very well. I think I'm trying to understand your question in terms of about clicks and click monetization. Maybe that's something Philip can touch on. But overall, we expect as we build out our organic experiences, we have a good understanding of how to continue iterating on monetization, so that'll work well with the organic experiences. But we will lead with the organic experience. So in terms of newer surfaces like Gemini app, etc., we'll focus on the organic experience for the near term. But just like we are doing with AI overviews and with AI mode over time, we'll be able to bring very, very good commercial experiences there as well. And we think people will adapt to them as they've always done. Maybe Philip can add more. Philip?
Yeah. So on your question on YouTube subscriptions versus ads, look, I mean, we love our ads business. We love our subscription business. YouTube subscriptions are increasingly important for YouTube. We'll definitely continue our long-term focus here. We had a strong growth across YouTube subscription products, which includes, just to be clear, YouTube TV, YouTube Music, and Premium. And I think one common theme for our subscription services in general is offering viewers more choice here. We also have a very deep understanding of the monetization side here. Where are we monetizing more with ads? Where can we potentially monetize more with subscriptions? So I think we will continue this as a double tier strategy actively going forward.
Thank you.
Our next question comes from Doug Anmuth with JP Morgan. Your line is now open.
Thanks so much for taking the questions. One for Sundar and one for Philip. Sundar, can you just talk about how you're thinking about your current access to compute? Even as you spend $10 billion more this year in CapEx, you also said that you're still in a tight supply environment, so just trying to marry those. And then Philip, perhaps on search growth, can you talk a little bit about paid click and pricing growth just within the 12% search growth and how we should think about volume versus monetization trends going forward? Thanks.
Doug, thanks. On the CapEx stuff, obviously we are seeing strong momentum across our portfolio, and especially in cloud. You are right; it's a tight supply environment, and we are investing more to expand, but there is obviously a time delay between this additional investment will play out in future years, and so that's why both of them are true at the same time. But we are planning ahead and we are investing, and but overall it's exciting to see the traction, particularly in cloud. I think the comprehensiveness of our AI portfolio, the breadth of our offerings, both providing our models on GPUs and TPUs for our customers, all of that has been really driving demand, and so we are investing to match up to it.
And on your paid click question, look, to be very clear, I think we said this before, we manage the business to drive great outcomes for our users and an attractive ROI for our advertisers. We actually don't manage to pay clicks and CPC targets. Some of the product and policy changes we make actually drive better monetization at the expense of paid clicks. you will actually see in the 10Q, paid clicks were up 4% year on year. But a number of factors affect these metrics from quarter to quarter, such as a few examples: advertiser spending, product changes, policy changes, user engagement, and so on. So it's really important when it comes to paid clicks and CPCs to avoid drawing like overly broad conclusions solely based on these metrics.
Thank you both.
Our next question comes from Brian Nowak with Morgan Stanley. Your line is now open.
Thanks for taking my questions. I have two. First one, Sundar, there's a lot of discussion about agentic search for commercial activities and agents that can be broadly deployed. Maybe could you just, from a technology perspective, when you sit down with the engineering teams working on some of these new agentic capabilities that could come, what are some of the predominant technological hurdles that you think need to be cleared in order to launch scalable agents for commercial queries is the first one. And the second one, I think in the past you've updated us on stats on sources of internal efficiency you've seen from Gen AI enabled capabilities. Any updates there? And then any sort of learnings on friction points that also need to be overcome for some of these internal tools with Gen AI? Thanks.
Thanks, Brian. Let me start with the first one on agentic capabilities. Look, overall, we are definitely, in many ways, when we built 2.5, our series of 2.5 models, particularly with Pro, etc., it's the direction where we are investing the most. There's definitely exciting progress, including in the models we haven't fully released yet. And the main gaps we are all trying to do is, you're obviously chaining a sequence of events. And so being able to do it reliably, the latency compounds, the cost compounds, and being able to do it reliably in a way for the users, all of this comes together. In each of this, we are making progress, and it all needs to kind of hang together. The good news is we are making robust progress. We think we are at the frontier there. And in all of these areas, when you look back in a 12-month basis, you end up making the models much more efficient for any given capability. So the forward-looking trajectory, I think, will really unlock these agentic experiences. We see the potential. We're able to do them, but they're a bit slow and costly and takes time and sometimes are brittle, right? But we're making progress on all of that. And I think that's what will really unlock. And I expect 2026 to be the year in which people kind of use agentic experiences more broadly, right? And so it's an exciting opportunity ahead. On the second part, I think when you say sources of internalization, I presume you're talking about how we are using all of this internally. Again, given you asked a question about agents, we are now beginning to roll out agentic coding journeys for our software engineers within the company. And it's been exciting to see just over the last few months, and particularly over the last few weeks, people are definitely doing more agentic workflows in software engineering as well internally. And that's a good example of the kind of the same experiences a few months ago had a lot of friction points, but we are overcoming it, and people are beginning to use internally on the coding side, as well as in certain other areas of the company as well. So exciting progress. I expect it to be an active area where we will roll out journeys for our users as well. So look forward to it.
Thanks, Sundar. That's great.
Our next question comes from Michael Nathanson with MoffettNathanson. Your line is now open.
Thanks. Sundar, I have two for you. At I/O, you announced a partnership with Warby Parker to develop glasses. So I wonder if you share your view of how important a cycle of new devices will be to further scale AI, and do you envision a world in which the mobile phone is no longer central to our consumer experience? That's one. And secondly, how does Google Search with AI mode usage differ versus Gemini standalone apps? I'm wondering, are you seeing any differences in usage or the types of consumers who go to the app versus who go to traditional search with AI? Thanks.
Thanks, Michael. On the first thing, look, I think anytime I/O changes, you can drive new experiences, including on hardware experiences too. So I think AI will particularly enable. We've long had the promise of glasses and other form factors, but I think AI will spur a whole new wave of innovation there. We are super excited about our investment in glasses, and found the experiences have taken a dramatic step up compared to the last iteration. So I think it'll be an exciting new emerging category, but I still expect phones to be at the center of the experience, for the next 2 to 3 years at least. And so I still think that's going to be phones would continue to be at the center of the consumer experience. But we are excited about the emerging categories as well. On your second question on AI mode versus Gemini standalone app, broadly, there are some use cases where you can get a great experience in both places. But there are use cases which are very specific. I think where the queries are, information oriented, but people really want to rely on the information, but have the full power of AI. I think AI mode really shines in that. You can go there and it's backed up. The Gemini models are using search deeply as a tool. And so it's all grounded in that search experience. And I think users are responding very positively to it. And whereas in the Gemini standalone app, you see everything from, people can have a long conversational chat just trying to pass time, right? And in the Gemini app, you've seen early cases where people may get into it, in a therapy-like experience, right? So these are all emerging experiences of what people do. And I think this is why I'm glad we have both surfaces and we can innovate in both of these areas. And of course, there'll be areas which will be commonly served by both applications. And over time, I think we can make the experience more seamless for our users.
Thanks, Sundar.
Our next question comes from Mark Shmulik with Bernstein. Your line is now open.
Yes, thanks for taking the question. Sundar, it seems there's almost like a daily news report about, the AI talent war and high-profile folks moving around, which is kind of like your perspective on how you think Google's been doing it, both kind of attracting and retaining key AI talent. And along with similar lines, how do we think about AI-related resourcing costs alongside kind of the step up in capital investments required to go build for AI? Thank you.
Mark, on the first question, look, I think we've gone through these moments before. We've obviously always deeply invested in talent, including in AI talent, for well over a decade now, and I think we have an extraordinary both breadth and depth of the talent. In my experience, the top people look for a combination of they want to really be at the frontier driving progress, and so the mission and how state of the art your workers matters. So that's super important to them. Access to compute resources and access to your peers, right? Working with the best people in the industry, and it's a combination of all of that and using it to drive impact. And I think we are pretty competitive on all those fronts. And through this moment, we continue to. I look at both our retention metrics as well as the new talent coming in, and both are healthy. I do know individual cases can make headlines, but when we look at numbers deeply, I think we are doing very well through this moment. And we'll continue investing in the people and the talent and the compute needed to make sure we are set up well for the opportunity ahead. And maybe I'll pass it on to Anat.
Yeah, now the question on how we integrate this into our overall cost structure, and I've mentioned before, having the benefit of having the full stack includes research, which is our people, and one of our most critical resources. So we make sure that we invest appropriately to have the best, brightest minds in the industry sitting here at Google and advancing our innovation to customers. It is part of what you're seeing now in our operating expense line across the organization, but we're also working hard to offset not just growth and investment across the business, but also to ensure that we can allocate resources appropriately. So Sundar mentioned earlier, the use of AI tools within the company. So that's another area where we can drive efficiency across the business, is to use these tools internally in terms of how we run the organizations. And then we're continuing on the same efforts that I've talked about before with regards to running the company with a high level of discipline and execution and driving efficiency across the business.
Our next question comes from Ross Sandler with Barclays. Your line is now open.
Great. If I can ask two, that'd be great. So the first one's on search click-through rates as a driver of monetization. So you guys have done a great job over the past decade of driving better ad relevancy and higher click-through rates in search. Just curious, as we look forward and we see lower ad impressions per SERP and all these things that are changing with AI overviews and different AI search formats, how do you feel about your ability to drive CTR going forward? And then the second question is, it looks like you're now working with OpenAI for some aspect of cloud infrastructure. Just curious how that relationship might expand in the future. Thank you.
I can take the first one. Look, specifically referring to the AI overviews, if I understood your question correctly, Sundar mentioned it. They continue to derive higher satisfaction. They continue to drive higher search usage. They're scaling up very nicely, and they're actually working for our entire user base now, scaled to over 2 billion users in over 200 countries. So very happy with this development. But when it comes specifically to the monetization of it, we talked about it before. We see monetization at approximately the same rate, which gives us actually a really strong base on which we can then innovate and drive actually a more innovative and new and next generation ad formats. That's how we look at it at this moment in time.
On the second part, with respect to OpenAI, look, we are very excited to be partnering with them on Google Cloud. Google Cloud, is an open platform, and we have a strong history of supporting great companies, startups, AI labs, etc. So super excited about our partnership there on the cloud side, and we look forward to investing more in that relationship and growing it there.
Our next question comes from Mark Mahaney with Evercore. Your line is now open.
Okay, two questions, please. First, could you just describe, maybe, Philip, what you see in terms of the ad environment, maybe for the back half of the year, maybe versus last year? Does it seem as certain or as uncertain as it was last year? The results seem pretty strong. Are there any unusual concerns you would have for the back half of the year? And then, Sundar, I want to ask you again about the two surfaces approach to search. And you obviously you must have some internal metrics that tell you that's the optimal way for you to approach the market. But I'm sure there's a counter argument that just having that unified search and being able to discern the intent of the search, whether it's pure information or commercial, just from the query, that could give you a material advantage over other offerings in the market. Just talk a little bit about what metrics you've seen that make the two surface solutions seem to be optimal. Thank you.
So let me start. Look, we said our ads business performed strongly in Q2. Give you maybe some vertical color of it. In Q2, search and other performance was led by growth across all verticals. We mentioned the largest contributions from retail and financial services, which was primarily due actually to strength in insurance. We saw healthcare as a sizable contributor to growth as well. Look, we're only a few weeks into Q3, so I think it's really too early to comment on anything happened in the second half of the year.
Look, and Mark, on the second part of the question, look, I think between these two surfaces, you pretty much you're covering the entire breadth and depth of what humanity can possibly do. So I think there's plenty for two surfaces to tackle at this moment. Obviously, you are right. Search is more information focused. And we think of the Gemini app as more your assistant, more personal, proactive, and powerful assistant for every aspect of your daily life. And so you can imagine wanting to code deeply or create a long video, etc. Like, those things can be done by the Gemini app today better. Over time, like we've always done, we've gone through these evolutions before. Like as you point out, we can understand user intent better and abstract some of the complexity for our users. At one point, people used to go to query separately for text, differently from images, differently from videos, etc. And we kind of made it all seamless with universal search. So we have the experience of being able to bring together experiences in a way that makes sense for users and do the heavy lifting for them. But I think, when you're in this early stage of new emerging paradigms, I think we want to make sure, we can meet them where they're, what they are expecting today. And over time, I think it'll give us an opportunity to serve them better. So I think that's how we are thinking about it.
Okay, thank you.
Our next question comes from Ken Gorowski with Wells Fargo. Your line is now open.
Thank you very much. Two, if I may, please. The first on cloud, I'm just hoping maybe you could clarify your back half outlook. Given last quarter, you talked about some supply constraints that would ease towards the end of 2025, but yet you put up a really nice acceleration in 2Q. Now you're talking about some supply constraints easing into 26. If you could just clarify a little bit on the back half outlook for cloud, given the strong results in 2Q. And then the second is a bigger picture question, which is an agentic experience. Does it democratize the web like search did 2 decades ago, enabling discovery in the long tail? Or does it lead to more concentration with a smaller group of vertical winners? Would love it if you could opine on that. Thank you.
Okay, on your first question on the cloud second half outlook and the comments I previously made on with regards to where we're going to see the capacity increase. So obviously we're working hard to bring more capacity online, which means data centers and servers are coming online. And we see more of an increase towards the back end of the year. But we're increasing capacity with every quarter that goes by, as you can see with the growth rates we've had both this quarter and in the previous quarter. As Sundar mentioned earlier, this is not the type of investment that's a light switch. It takes time to make this investment. So what you're seeing now is investment we made some time ago that's now translating to additional capacity coming online, but more of that towards the back end of the year. I will say it's important as you think about cloud growth, not to think about this in a linear fashion, because the quarter-on-quarter growth rates could depend on the timing of capacity delivery and when that comes online. So that could move a little bit from quarter to quarter.
Look, on agentic experience, look, I think there was an earlier question on the technology aspects of it and how we are making progress. Obviously, there's the value proposition for all the players involved, and I think that's going to be an equally important thing to create the unlock here. And I do think, over time, users will, it's clear to me as we make progress on the agentic experience, it's going to be a much better experience for users, right? And so you'll find savvier players leaning into these experiences, and that'll help them grow and meet this moment. And I think, so I do think it's an opportunity for some of the players. And so you are right, just like the early days of the web, there are aspects about it which will expand access, grow the use cases, etc. And I think that elements are there. But I do think it's important. It's not just a technology play, but we have to solve the business models for the varying players involved. So, and I think that's going to be an important part of this evolution as well.
Thank you.
And our last question comes from Justin Post with BAML. Your line is now open.
Great, thank you. A couple for Sundar. First, looks like the subscription businesses are all tracking well, and certainly Gemini 2.5 has got some much good reviews. how are you doing with Gemini subscriptions? I know it's a focus area for the company, and anything you can kind of do to accelerate the consumer subscriptions of Gemini within Google One. And then secondly, just on the course change of CapEx, obviously a bigger increase, which appears to be because of cloud demand, but just your comments on cloud ROI and I'm sorry, CapEx ROI. What gives you confidence that you're going to get good returns on that spend? Thank you.
Great. Look, on the first thing on subscriptions, we've definitely, Google One has been an attractive value proposition powered by storage, but with now our AI plans, including both Pro and Ultra, and particularly with the 2.5 series of models, we've definitely seen accelerated traction. So it was a very healthy quarter. And so we are definitely excited about the opportunities ahead. And you will find, through this moment, I think we'll be able to drive growth in that area based on our AI offerings. And so it's definitely an area we are both excited by, and we are actually seeing traction, particularly in the last quarter, ever since we introduced 2.5 Pro. So we are excited about the trajectory there. On the CapEx on the cloud side, look, I think we are definitely investing because we are delivering a lot of value through our cloud offerings. And I think it's important to understand, as we build more and more of an install base with Google Cloud, we have very high customer satisfaction. Our churn rates are very low, and we are much more efficient in the investments needed to grow those lines of businesses. So you are seeing all that play out in our margin trajectory, particularly if you look at it annually, sequentially over the past few years. So all that gives us confidence as we are investing in this. We'll be able to have a healthy ROI on our investments, and particularly in this AI moment. There's definitely the value we are delivering to the customers is also growing pretty significantly on a forward-looking basis. And so I think all that, will help us, do well here.
Thank you. That concludes our question and answer session for today. I'd like to turn the conference back over to Jim Friedland for any further remarks.
All right. That is it. We got 3 minutes until Tesla. Jose, I think he's going to have to go, so he's not going to be able to stay for Tesla. But Jose, give me your raw thoughts on that call.
I mean, overall, it was great. We see some strong growth in the cloud. We see kind of that growth on the search. They mentioned some crazy amount of users using Gemini already. So again, maybe it wasn't the crazy numbers for a pump right after earnings, even though we are up a little bit after. I think for long-term investors, this is the type of earnings call you want. There's nothing that showcases that there's any major headwinds that I think we should be worried about.
Yeah, I thought it was a good call. Look, we got to 198 at one point, so we got a little bit of a pump, and then it kind of faded. It leads me to believe maybe tomorrow the street gets excited about what they saw. We went through the numbers already. Absolutely incredible. 450 million MAUs on Gemini. That's up from 400 million. 2 billion, I think is what he said, DAUs on search AI overviews. Like, the numbers were pretty damn good. Even Gene Munster, who is, I think he would even classify himself as a Google hater, he tweeted after hours and he said, hey, I think Google should be higher based on this report. So this was a good earnings. It's just a question of, how the street thinks of it long term.
And like you mentioned, I wouldn't be surprised if tomorrow we end up waking up to bullish analyst calls or price target upgrades for Google after this earning.
Yeah, agreed. All right, so we got Tesla soon, but while we're waiting for Tesla, which is literally in about a minute, maybe 2 minutes, Trump is live. Jose, thank you for being here. I'm putting Jose's Twitter in the chat. We will see you next time, Jose.
Thank you. Bye.
2,750 to 505. And that's why the map is almost completely red, except for a couple of little blue areas on each side of it. But it was a great experience, frankly, for me. And it was great seeing you again. Great couple. David Friedberg. And even, as we know, Jason Calacanis. I say even. Thank you, Jason.